Let's talk about the new year, these New Year's resolutions and new goals. From a financial standpoint, there's a lot of things people can do to start their year off right.
The very first thing at the beginning of a new year that you should be doing is reviewing your financial plan. The discussion around what your goals are, revisiting what the goals were that you set out last year. Did you meet those? Are we on track?
Keep score. What adjustments do we need to make? But also, it's a great time to really be optimistic. Welcome to another episode of Wealth Strategies Unleashed with Concenture Wealth Management. I'm Robert Gilliland, and with me is
Karen Hyder.
Hey, Karen. Thanks. Excited about this episode. We're in the brand new year. Everything's getting started. It is it's a lot of fun. But before we go to get started, let's maintain our tradition, and that is, do you have any good dad jokes?
I do. In fact, this one, since this is a New Year's discussion, I have a New Year's joke for us.
All right,
ready for it?
All right. Well, yes.
Okay.
Thank you for not saying it's going to be a good one.
We'll see in just a second. What New Year's resolution should a basketball player never make? You're sporty. I feel like you should get this one.
What New Year's resolution
should a basketball player
Traveling.
never make? Travel more. Way to go.
Boom. All right.
Always time for a first.
All right. So let's talk about the new year.
Okay.
What kind of thoughts do you have about the new year? A lot of real exciting times, and this is a time where a lot of people are thinking about New Year's resolutions.
Mm-hmm.
You know, from a financial standpoint, there's a lot of things that people can do to start their year off right.
Mm-hmm.
What sort of questions you kind of have kind of around there?
Yeah, I think it all starts with we preach and talk about so much financial planning. So I think the very first thing at the beginning of a new year that you should be doing is reviewing your financial plan. And with that comes a discussion around what your goals are, revisiting what the goals were that you set out last year, kind of do an assessment, see, did you meet those? Are we on track for those?
Right.
Have some of those already been reached and now we have new ones to set forth? And this kind of comes into two parts. So for those of our listeners that are singles or widows, divorced, things like that, you have a conversation and a review of yourself, looking at what you want to accomplish this year. For our listeners that are in a relationship, married couples, sitting down together with your spouse or with your partner and reviewing those goals together. So I think the very first thing is assessing where are you on track for your goals and what new goals or goals need to change in this new year.
You know what? I think that is exactly right. And the thing, and just kind of thinking through with our clients, you know, the beginning of the year, at least for me personally, I always have this, all right, let's go get them. Everything's going to be great. This is going to be awesome, hard charging. And the thing that we do is we sit down with every single one of our clients in the first 6 weeks, right? And the thing that I find that is so important is that's really a great time to not only keep score, are we on track? What adjustments do we need to make? But also it's a great time to really be optimistic and think about what is there anything that's kind of going on? And I'm always surprised that have a conversation with a client, let's say in the fourth quarter, and then we get to that first couple weeks of January and say, hey, is there anything big that we need to know about or want to know what's going on? Mm-hmm. And everyone always a lot of people, I should say, always have kind of these New Year's resolutions, right? These financial New Year's resolutions and new goals. So reassessing that plan, seeing where you are to get up, making sure you're on track. And it's a great time to do a little bit more dreaming, right? I mean, and so having that conversation, sitting down, reviewing what happened and what's going to happen, and then how does this apply to you is vitally important to make it to bring you clarity.
Absolutely. Let's kind of pivot a little bit. For those of our listeners and our clients that are not yet retired, that are still in their working years, there's a lot of things to think about in the brand new year as far as planning for retirement. Let's dig into that a little bit.
Yeah, you know, as you get started here into 2025, there are a couple things that you can think about. You may want to fund an IRA contribution, all right? You may or may not be able to fund a Roth contribution depending on what your income levels are. But one of the things that a lot of people do is they procrastinate on making their contributions for 2025 till the end of the year or closer to the tax filing deadline. The reality is that if you get that money in there earlier, it's got longer to grow. And by the way, it doesn't matter if the market's at an all-time high or somewhere in between, right? It actually, time in the market is more important than timing the market. So that philosophy right there, right, of getting the money in early for that current year's contribution makes a ton of sense, okay? And so whether that is your IRA or your HSA, front-loading those all comes through and it makes sense. Same is true with your 401k, right? I do think that with regard to retirement contributions and starting out with an impact, if you're able to, I try to get people, unless they're already maxed out, to at the first of the year is a good time to go in and go ahead and raise that contribution into your 401k.
Absolutely.
Even if it's just 1%, it's going to make a big difference, right? The reality is being in there is more important than the time. So get those contributions in early, get those funds invested so that it can work for you.
So we're getting into tax season here. I know taxes are on a lot of people's minds. So let's think about that for a second and talk about what are some things people can be doing right now to review their tax situation and make sure that they're on the right track this year.
Yeah, you know what? One thing that's really important, because 2024 was a really good year. If you have open-end mutual funds, those are mutual funds that have 5 letters, right? Generally end in X. You have different types of investments, possibly money managers. We tax manage our clients' portfolios to help minimize that tax bite. But it's vitally important to go look at that year-end statement and see what your realized capital gains are. So you can start planning for what that tax bite is going to be come April 15th, right? The other thing that is, no one wants to do it. And I think about my father, who is the king of procrastination. All right. It makes sense to take a second and just start to get what you need to get to your CPA or what you need to complete your taxes. Go ahead and spend a little bit of time and get organized.
Absolutely.
You know, and if you go through to get organized now, if you have to make estimated payments, you already know you have a deadline January 15th for 2024, making sure that you're inside there. And at that point, it's also really good to go and look forward and say, okay, is my tax situation for 2025 going to change? Do I need to adjust my withholding? Do I need to think about, say, making estimated payments? What sort of things do I need to do so that I don't find myself caught, right? And if you're a retiree and you're doing distributions, hey, look, let's take a look and see, can I adjust my withholding on my IRA distributions, right? And that makes sense. It will also make sense, because we don't know what's going to happen with the Trump tax cuts, though we have an idea. Also makes sense to evaluate your Roth conversions. This may be the last year to do it. So there's a lot of things that you can do in preparation that's going to make your life easy so that you're not stuck.
Absolutely. And I would add to that too, for those of our listeners that are super organized and want to, or maybe their New Year's resolution is to be more organized, making a list and planning out. If you know what tax documents you've gotten every single year, make yourself a list of what those expected documents should be so that as they start coming out, you know where you are. Do you have 4 out of the 5 that you need? Do you have all 5 and now you can send them to your CPA or start putting them into TurboTax if you do them yourself? Having that list and it's something you can check off as those come through will make sure that you don't miss anything.
And that's an awesome idea. That really is, because the reality is, how many times have people said, what about this account? Well, I no longer have that account, right?
Exactly.
Or I haven't received it, right? And then you're at the final hour, at the final minute, the final second, scrambling. And so reality is taxes are inevitable. Let's all hope that they go down. But that's a really good point.
Yep. So here's one that I feel like a lot of our listeners probably take the approach of, I've done this, so I've set it aside. I don't need to worry about this again. But from an estate planning standpoint, how many times do we come across situations where a client has had a life event happen and it's going to affect their will or their trust or something else that needs to be reviewed? So beginning of the year is a great time to rethink and reevaluate your estate plan to make sure everything is on track. Let's dig into that a little bit further.
Yes. Yeah, that's a really, really, really good point, right? And that there sometimes things change, right? We've had several clients in the past several years that in going through and sitting down with them and reviewing that estate plan, that they had an executor or an executrix that either they're no longer friends with, or the executor or executrix is no longer alive, or the trustee is no longer capable of doing that, or there are other people who would be better. It absolutely absolutely makes sense to review those documents, right? And no one really loves to do that, but it makes a tremendous amount of sense. So that's number one. The other thing, kind of building on that, is, and we do this with our clients when we're doing our sitting down with them in those first 6 weeks, is you want to go back and confirm who your beneficiaries are. Because
Absolutely.
It really is amazing. Things change. Or when you set your beneficiaries up 5 years ago, maybe you didn't do the contingent beneficiaries. And as we're starting to see, that's becoming more and more important.
Well, there's so many places that clients need to be, or investors need to be reviewing, whether that's retirement accounts, taxable accounts, life insurance policies, annuities, all these different places. It's very easy to forget one of those, which can have a huge impact down the road. So taking the time now at the beginning of the year to review all the different types of accounts, all the beneficiaries associated, in addition to your wills, your power of attorney, your medical power of attorney, all those different pieces to make sure everything is aligned in the way you want it to pass.
You know, that really kind of hearing you walk through that laundry list of things you got to go and look at. You've got your taxes you got to get squared away. You've got all these different things that are inside there, right? It seems like a lot, and that can be overwhelming. And I think that's the key of having a process. That's the key of I would argue, working with professionals that they're the ones who are going to confirm and check that off for you, right?
Absolutely.
It does. If you get everything organized at the beginning, then it's just a matter of looking at a one-pager that says, here's where it is.
Yep.
It sounds overwhelming, and getting help to get that set up is vitally important.
Yep. And I would add one more thing to that. So as you're reviewing those estate planning documents, if things change, for those investors that have adult children or other people involved in these conversations, be sure to update those people, those trusted people that know what your plans are. If a document has changed, make sure your trusted people have the updated document. If you have, like for our clients, we use our client portal, and many of our clients are able to actually upload those documents securely so that we can help their trusted person should the time come where something has happened to them and the trusted person needs to step in and help execute those. Make sure that that your advisor has them, the trusted person knows where they are, and the new copies get put in the right places.
Right. It's all about making something that seems overwhelming easy.
Absolutely.
Right. And that's kind of where we are. What are some kind of key strategies at the beginning of the year when it comes to how your portfolio or your investments are set up?
There's two things I think of. The first one I think is just kind of evaluating everything you have in your portfolio, looking at each individual account. What are you investing in? Where are you set up? With our clients, we like to sit down and review what we think the outlook for the next 12 to 18 months is, especially with this new administration coming in. There's maybe some tweaks to be made, but the very first thing I would do is look at what you're investing in. Then I would look at from a risk standpoint, is everything still aligned with where your risk tolerance is? Last year, like we just talked about, was a really good year in the market. So we've probably seen a lot of growth in certain areas.
Right.
There's probably areas that need to have gains trimmed and kind of reallocated. So beginning of the year is a great time to review where your risk is in your overall portfolio and make sure it's still appropriate. What else would you add to that?
Yeah, the challenge is when we've had these couple years of really, really great markets, the challenge is doing the right thing, right? Because, I've been around long enough to remember, man, that's uncomfortable to say, back in 1999, last century. At the
my
end of the last
goodness.
century, people's portfolios, they thought that they were diversified and secure if they owned Netscape, if they owned Microsoft, if they owned Intel, if they owned Cisco. Those are all big blue chip companies and nothing's going to happen with them, right? Reality is that, yeah, in 1999 they went up, and they weren't willing to make adjustments. In 2001, their world changed.
Absolutely.
Right? Now, Netscape's no longer in existence, and Intel's performance has been lackluster relative to its peers, and Microsoft has done pretty well, but there's a lot of things that change. And so making that risk adjustment is something that's uncomfortable. And that's where making sure you have your income plan and everything that's in place, because rebalancing a portfolio is, you got to take the emotion out of it, right?
Yep.
And you also got to change your perspective from what's happening today is going to continue to happen tomorrow, the next day, next month, next year. Things change, and you've got to be prepared for that.
Absolutely.
You got risk with regard to a portfolio, right? We understand that's about how much you have in cash, how much you have in stocks, how much you have in bonds, what your strategy is, and where that is. We got that. There's a whole nother side when it comes to risk, and maybe this is, as opposed to me asking a question, just something else that I think that people should talk about and get your input, is I do think at the beginning of the years, it's a good time to evaluate the other areas where you have risk. That could be looking at your home insurance policy, evaluating, are you covered, and understanding where that is. Looking at your auto insurance, looking at your life insurance, looking at your umbrella policy. One thing is that at the beginning of the year, you're optimistic, we're going to be organized. Well, here's an opportunity for you to get everything completely organized, but also say, yeah, you know what? I had this $1.5 million life insurance policy, but all my kids were in high school at that time or elementary school at that time. If something were to happen to either one of us, our kids are fine. Maybe I can reduce that amount, right?
Yep.
Or hold on, I've got young kids. I only have $100,000 worth of life insurance, and if something were to happen to me, that's not going to be enough to pay for their college or make sure that they don't have to move out of the house or make sure life isn't changed. It also could be that if I have it at the time, if I had insurance on my wife, then if I have young kids, is that going to be enough to help bridge that gap so that there's someone there who can fill in for all of the stuff that she does, right? How do we do this so that life doesn't change? Just going through and reviewing those. I think it really is about doing it. The first part of the year is a good time to do that personal inventory. Hey, I think we covered a lot of ground.
We did.
Do you have any other questions?
No, I think we covered a lot today.
All right. Well, hey, I think that it's exciting to be in a new year. There's a lot of changes going to happen. Reviewing that plan, making sure you're on track where it is, which is what we're in the middle of sitting down with clients on. And it's always fun and exciting, right? And having that plan to go. And so Happy New Year to you.
Yep.
And we'll see you next week.
See you next week.
The information contained herein is intended to be used for educational purposes only and is not exhaustive. Diversification and/or any strategy that may be discussed does not guarantee against investable losses, but are intended to help manage risk and return. If applicable, historical discussions and/or opinions are not predictive of future events. The content is presented in good faith and has been drawn from sources believable to be reliable. The content is not intended to be legal, tax, or financial advice. Please consult a legal, tax, or financial professional for information specific to your individual situation.
This work is powered by Concenture Wealth Management, registered representative of Sanctuary Securities, Inc., an investment advisor of Sanctuary Advisors, LLC. Securities offered through Sanctuary Securities, Inc., member FINRA, SIPC. Advisor services offered through Sanctuary Advisors, LLC, an SEC registered investment advisor. Concenture Wealth Management is a DBA of Sanctuary Securities, Inc. and Sanctuary Advisors, LLC.